Welcome to Trading Lounge and the daily US stocks for Thursday the 13th of January, starting with Amazon on the daily chart here. As you may know, we've been looking from this top here down through here, counting 5 waves, and then looking for a corrective move back up into the little box here, the 50-60% retracement level. So most of the stocks are like this, and also the S&P 500, we're sort of looking at the same thing as well, that retracement up and then a move down. So we can see that it's at that space at the moment. So what we need to do now is we need to look for trade setups to the downside. Now, it's always tricky shorting on the turn. So one of the ways to move forward is to use very small positions and just sort of build in as such. So, you manage your exposure because there is risk. The market has been moving up and you're trading in the opposite direction of the trend. So let's cruise in to the 100 ticks and we'll need to, I think that box, let's just check on that. Bit hard to see in there. Anyway, let's go to the 5 tick anyway. So in this case here, the closest largest number, this is our swing range here, right, between 300 is a minor level, and it's also the top of minor group 1, and then we've got subgroup 1 up here, 10, 20 and 30, and then below that we've got 80, 72 and 65. So that's the swing range for anything that goes on here. If the 30 becomes the support up here and trading above it is not support, we need a classic trading levels pattern to ensure that that number's being tested, the 30's being tested, and then if that's the case, the market will be pulled to the 50, the 5, the second strongest number, and the next level up. So now it does appear that we've got some sort of little impulse wave down here, so we could short it here. We could also look for a classic trading levels pattern on the downside. Now we may get something very simple like this if that's the level that we're working with. So the market hasn't come through it yet, but if it came through it, then you'd have that reference point low on the retest, because most of the time it retests. The breakout's important and the retest is important and the setup is important. So there's a bit more to when a market breaks out of a pattern like this here, there's a little bit more to it. So you have that reference point low and the second reference point low here, and most of the time, or quite more often than not, this move here will attempt to get back up above the level there. So in that case, we know that we're looking at it like this here, where it moves back above the level. But the same thing applies. We keep keep that reference point low, the second one here, and if it does trade above here, well, you'll end up with another classic trading levels pattern in here, which is this bigger pattern here as a fractal into this little space here. So you'll be able to work that. Okay, the second point I want to make here is that once group 2 here becomes the resistance, then you can short that as well. So you could put that under there, and you can also wait for the next level down, the 50, to become the retested resistance as well, and short that as well. So it's basically getting confirmation as we go, because we may end up getting a situation, this first move down through here and it's pulled back 50 or 60%, hasn't it? But that could just be a little A wave here, B wave here, and coming down for a C wave here, click you in on the trade and then move up again. So the stop needs to go above here, and that's your risk there. And you get support here and then keep going, because we're trading, it looks quite impulsive here. Let's go to the 5 tick chart. So I'm not saying it's easy. It's really about risk management at the end of the day, managing your exposure with all of this. So in this 5 tick chart here, we're looking for a retracement back to this area, and the market is stalling there. It is the 50-60% retracement level, but I can't seem to get a corrective pattern out of it. I can only seem to get a bullish pattern out of it as 1 and 2 and 1, 2, 3, 4, and that's okay for 5 and 3 and 4 here and 1 and 2. So I might have this wrong here, because I sort of it may be the 3 there. I just can't get in here close enough to figure that out. So we could end up, if I was wrong and the market came down, then this would be the count over here. It's a little bit weird. but then all of this would be the A wave here, the B wave here, and the C wave here. But the C wave is really short compared to this here, so it does look bullish. You know, I gotta say that, but I can't figure that little bit out in here. I can see the 5 waves here a little bit dodgy, but yeah, so I'm getting 5 waves here for this. So we need to be careful. And if we're going to get 5 waves, well, then we would get, that looks impulsive here, doesn't it? So we would get this move down as an A wave, a B wave, and a C wave here, and then move up from that point. This length should be something to do with this length, and it should stay within group 2. So with that in mind, if we take now the lower end of group 2, which is 65, close enough. So what we could do, if you see 3 waves here, then you'll know that it's possibly corrective and can go up. But if you go to short under the 3 waves, then that makes it a little bit safer at that point, because then you'd be getting something bigger at that point. It would come through here, retest that, and then drop here. Where that low is, that's what you need to work out. And then at the 65 here, if that becomes the retested resistance, then you can look to short again at that point. And that, you know, if you normally trade, you know, 10 shares, well then just trade 2 here, you know, and then, you know, build in maybe another 5 over here and start to build in that way. So steady as she goes, Captain, you know, because this is the risk. So I'm showing you the other side to the coin here. The Google, once again, we're looking for the same thing as well. But first of all, it can be bullish because we've got wave 3 here, an A wave, an ABC for the B wave. All that's cool. And then we've got 1, 2, 3, 4, 5 down here. So that wave 4 can also sit on this top here. If you've got that, that's cool. So we could have it all finished here and we can be moving up from that point. But we're also looking at it as wave 1 down here and coming back for wave 2 and then coming down. So in this case here too, we would want the 2800, the 8, which is the 3rd strongest number in the market. And you can see that it doesn't matter if it's the 3rd or the 4th or whatever, but the point is that it's popped its head up here. Can it stay up there? That's the trick, because it carries a lot of weight at this point. Let's go to from the 100 ticks down to 5 ticks. And with 5 ticks here, it counts quite nicely as an ABC correction here. So if you follow along with me as 1 and 2 and 3 and 4 and 5 for the A wave, back for the B wave, 1, 2, 3, 4, and there would probably be, well, you could look at it as wave 1 and 2 and 3 and 4 and 5 diminishing into that point, or you could get a wave 1 and 2 out of here. Whichever way you go, it's really quite a nice 5-wave structure all the same. We do have 5 waves coming down from the top there as well, a little bit tricky to see. But anyway, we've got this here. So the other flip side to this really is that this can be wave 3 up here. So we can look at this as wave 1 and 2 and 3 and coming back for 4. So in this instance here, we look at both sides of the markets and then we come up with a strategy that can give us half a silly chance of making some pocket money. So in this case, it looks a little bit impulsive down. Here's 5 waves of 1, 2, 3, 4, 5 in here. And the 38.2% retracement level is here. So the market can come to this point and then move off from that point. It doesn't mean that you need to trade it at that point, because the interesting point here, if I can just remove that, if that is wave 1 and 2 and 3 and 4 and 5 here, well then what's going to happen next? We'll probably go to the 29, that makes sense, and then we would have an ABC correction at that point, wouldn't we? So this first leg would come down to this consolidation area here, maybe at the top, the bottom, middle, don't know, and we'd have something like this. So that having 5 waves there, then an ABC, that'll give us the opportunity to go long at that point there. So in this case here, that's where we don't need to chase that up. We can get it back over here. This move here as an A wave, a B wave, and a C wave, it comes very close to the 2800, probably just above it. So that means that we can short this here if it comes any lower than that, or this level becomes the resistance in one way or another. Well, then we can look to short it at that point. Keep the stop out of the way. And you know, set your order up, and if it gets triggered, it gets triggered. If it doesn't, it doesn't. And then you're on your way at that point. So that's one way to sort of handle this situation. Sort of, we're just being just another layer of security in with all of this. And this is what we'll need to be doing with all of them. So Apple here, I mean, there's a pretty clear wave 5 down through here, but I always wonder if this is actually an A and a B and a C here. Tesla had the same pattern here as well. And Tesla's also got the nice 5 waves down here. So we've got nice 5 waves down here. So I'm kind of respecting that from the high and thinking, well, an A and a B and a C. You can see it's hit the box and it's sold off at that particular point there. So let's cruise in and have a look at this on the 100 ticks. So, once again, it's kind of the same pattern really, isn't it? Looks like we've got a 5-wave structure. So counting from the bottom here is 1, 2, 3, 4, and 5 here, and then a correction back for this one here. And I wonder, yeah, it's probably right. And then 1 and 2, nice strong 3rd wave here. I was having a little bit of trouble with this here because, I mean, it looks like 5 waves here, so maybe I could pull that over to that point there. But if I look at that as 1 and 2 here, then I would need to look at from wave 2, I'd need to look at this as 1, 2, 3, 4, 5 here. So that would just be the 3rd wave here and the 4th wave here. But the 4th wave's come down. You know, the 4th wave, the 38.2% retracement level from that low, wave 2 low, to coming down from wave 3 would probably be about here somewhere. So it's come down, let's just check it out. I mean, it's come down too far. It's come down like, yeah, 60%, 60 more, you know. So it's probably not the case. So if I can assume something here, I've got this little wave 1 here, so I think that's the case, and we put wave 2 here, and so we've got 1, 2, 3, because a nice 3rd wave, isn't it, and 4th and 5th, so we can put this over here and this here and this here and call the high in here. But is it the high, or do we go further up in this case, you know? And it will be the same as well. So I could be wrong here, because we could look at all of this as wave 1 and 2 here, and then a nice strong long 3rd wave up here and coming back for the 4th wave here. So in that case, just looking at both sides, so in this case taking it up to here, that leaves the 38.2% retracement level here. So that's all quite nice at that point, isn't it? So really, let's just put that line in there so we know where we are for next time. So we need to stay flexible, and we need to, you know, if we need to go long, we need to go long. It doesn't look like, you know, this looks like 5 waves down here, and this looks like an A and a B and a C wave here, and then 1 and 2 and 3 and 4 and 5. So it does make a nice ABC. So there is a case for further upside with all of this. So an A wave, B wave, and C wave here. So we've got those 5 waves there. It might, you know, it might just give us an A and a B and a C back up to here and then drop again from here. You know, but I'm just looking at both sides here. But it does mean that we can go short under the 175. But it probably also means too that we can go long above this top here, but we could bring that down here somewhere for that. So I'll leave that up to you for that. But yeah, just looking at both sides and being practical about it. And let's cruise along. So, yeah, I was looking for one more move here to come down here, but the little move up here seems to count as 5 waves as well. So I do wonder if we need to put this in here. It's right on the 61.8%, or we're going to get a bigger rally and so on. Let's cruise in and check it out. Yeah, so just from the low here, as you know, I was looking for wave 4 to come up here, but when I count it here, I've got 1 and 2 and 1 and 2, and yeah, 1, 2, 3, 4 and 5 here for the 3rd wave, the 4th wave. The 5th wave's a little bit dodgy, but this is what happens when you're working with large numbers, and the 150 in this case, it skews the wave count. So 1 and 2 and 3 and 4 and 5. Now, a lot of people would spit the dummy on that, and I understand that, but I know from experience and observation that this is exactly what happens at levels, you know. So in this case, we've got 5 waves up here, right? And then we've got this A, B, C here. So a 3-wave move, so that's bullish. Well, it's not confirmed that. If this top gets taken out here, well, then that would be a long trade at that point, if that was taken out. Obviously, we're starting to get this move here, which also looks impulsive, so we don't have to take that top out. We can refine the situation a little bit further. If this is going to be a wave 1 up here, then we're coming up for, I'll just draw it out, 1 and 2, and this will be wave 3, 4, and 5 here, and then there'll be a little ABC pattern here, and then you can go in at that point. So we can refine this by putting this on the top here, or better still, you can go over here on this if you get that. But if you don't get that, then you got to go with that. Also, too, with this wave 4, this level here, this horizontal line, that's the 38.2% retracement level, and the wave 4 from one lesser degree. And it's okay because going a bit higher is okay because markets like to, you know, people think in whole number terms and even numbers and so on, whole numbers and even numbers and so on. But this is also looking bullish here as well. So yeah, on we go. Facebook Meta platforms here. Once again here, it does appear in this case that we've got this here as a corrective move, unless we've got an expanded flat, sort of an expanded flat with wave 1 here, an A and a B and a C wave here, and then moving up from that point. So that's possible. We could put, you know, have this down here's a WXY here and have this as 1 and 2 here for this. So we're just shooting the breeze and just checking things out, but let's go in and have a look at this. 100 ticks. So yeah, it's a little bit wobbly here in this one too, so I need to talk about this. So from having this move down through here, the first leg's easy, so we've got 1, 2, 3, 4, 5 here for the A wave and the B wave. And then we've got this situation here where we've got that 5 waves here, so we can call that wave 1 and 2 here. And then we've got this move up here, which I'd sort of naturally call wave 3, and then we've got this A, B, C correction here, or you may even get that into 5 waves of 1, 2, 3, 4, 5 maybe. But yeah, we're back over here with that. I mean, and the fact is wave 4 is overlapped the top of wave 1, but not only that, it's also overlapped the bottom of wave 2 there. So that's not going to be right. But even so, because that's taken out the low here, I can't even call this, if you don't mind, let's go in here. I can't even call this wave 1 here and wave 2 here because it's also, you know, overlap that there as well. So I'll probably have to look at this, and that looks like 3 waves here. I don't 1, 2, 3, and 1, 2, 3, 4, 5. It's just squashing it all up. Do you know what I mean? And then you're kind of going into the guessing game a little bit with this. So the other way you can look at this is putting wave 1 over here as well for this. Oh, wave 2, sorry, over here for this. This little move up here is 3 waves. So it's got the same sort of pattern here. That's like a little impulse wave here. So it's a little bit tricky, but based on this move here, we should be going higher. Anyway, the takeaway here is that, well, firstly, I don't know what's going on here, so I'm just going to put this over here for that, and I can leave that there for the time being, and we can put this up here further and so on. But if we were going to short this, let's just say that it sort of hit this supply group over here and it's not going any further, then any short trade, we would need this number here as the resistance. So we need a classic trading levels pattern, bearish one here. So the first low below the level and then the retest and then down at that point. You know, I could call this a WXY, but really we're looking at a wave 2, so it should be just a simple zigzag of 5-3-5 structure here. So I'm a bit unsure about this one, so I'll have to come back to this. I don't think it will be going anywhere very quickly because there's a lot of supply over here for all of this. So and we can see that it's dragging its feet here. You know, it moved nicely here. This reflected this. this is going to reflect this. So and I can see that it's messy, so it's going to be a bit of a dog leg here. So let's just wait and see on this one. I don't have any answers. And Tesla. So with Tesla, we've also got a nice 1, 2, 3, 4, 5 coming down here. So we can look at this, as I mentioned, as a triangle pattern. It works. This also counts as 5 waves up here. So the triangle pattern would be sort of secondary within all of this. Do have 5 waves here, so I was looking at a correction into this box here as well, and so far it looks like an ABC in there, but of course it could move up further. We don't have 12th, 11th. I wonder why it doesn't bring the volume in on the day here for this. So annoying. Okay, anyway, let's go to the tick chart and check on this. So I've got 2 counts here, one on this 100 tick chart and one on the 5 tick chart. So in a nutshell, we're looking for it to come into the box here. So we're pretty close into the box at this point in time. So in a nutshell, I was looking at this as wave 1 and 2 here, and 3, 4 and 5 here for the A wave and the B wave here, and then up for 1 here and back for 2 here. Then I've got this as 1 and 2 here, then 1, 2, 3, 4, 5 for the 3rd, 4th and 5th wave coming in there. I was waiting for the 5th wave, so there it is, 1, 2, 3, 4, 5, so that's all good, don't need that. So yeah, we've got some little top coming into play here. If this was going to pull back here, so we're going to talk about the sort of trade setup on the short side now. If this was if this is wave 3 here, then this is the 38.2% retracement level coming back at this into group 2 here. So we've got group 1 above and group 2 below here. That's the swing range for this number, the number 1, not so much the 1,000, but the 100 is what we're really talking about here. So we can get an ABC correction here and then have another move up here. However, if this comes down here and overlaps its wave 4, wave 1 over here, then you know that we've got overlapping wave structures and we can look to short. And if we're going to look to short, then we can use the 72 here within group 2 as a position to the downside, and we can also look at the 65 here, the 65, the lower end of group 2, as a resistance here. And then you can also look to build another short position on the 50 as it becomes the resistance. There will be a bounce here, and you may be able to short the bounce into 60 or something. But yeah, so because if it comes down, we'll be coming down in a 3rd wave. So we've got, it'll be longer than, let's go back to 500 enough. Yeah, so there is there's a pretty clear case of 1, 2, 3, 4, 5 here. So we're looking for an ABC back and then down again. So there's a good case for that, really, isn't? I mean, I think so. So the question is how to sort of work this. Now, my count on the 5 tick chart, which I kind of respect a little bit more actually, because it's just, you can see the detail in things a bit more. Just go back to, is 5 enough? Not quite. 10 then. So from the low here, I've counted my wave 1 here. In the other chart, I had wave 1 over here for that, but I've got this wave 1 here and wave 2 here, and then I've got 1, 2, 3, 4 and 5 for the 3rd wave, and then the 4th wave here, and then I've got this as the 5th wave here for wave A. Then I've got an A and a B and 1, 2, 3, 4, 5 here. I know the wave 3 is a little bit short in there, but that's okay. And then wave 1 here, and then an A wave to here. The B wave is to that top there, and then we've got 1, 2, 3, 4, and another little 5 waves in here for 2. Then 1 and 2, and then 1 and 2 and 3 and 4, 5, 4, 3 and 4, and then 1, 2, 3, 4, and 1, 2, 3, 4, 5 for this 3rd wave, and then the 4th wave to this point, because we've got 5 waves in this point. And A, B, C to here, and then we can look at this as 1 and 2 and 3 and 4 here, and then 1, 2, 3, 4, 5. So that should be the top in this case. That B was for the triangle, but so it doesn't really matter. No, that's okay. It's 5 waves, 1, 2, 3, 4, 5. So really, if it goes above this, you know, I mean, technically you can go long there. It does look like I got 1, 2, 3, bit high for a 4 here, isn't it? And a bit high because it overlaps here, so it's probably 1, 2, 3 here as an ABC. So it does look like we're going up further. Have I made a mistake somewhere? 1, 2, 3, 4, 5 for 1 and 2 here. So maybe I need to label it that way. So we'll just remove that for a moment. Just so that looks like the wave 1 there and 2 there. So that makes that 1 and 2 and 3 and 4 and 5. So maybe we could have another one to the top there. Okay, let's just say that we get one more to the top there. It's not going to bother us at all, but where the short trade comes in will be under this level here. So here and then down here. This one's higher risk, so you trade less at that point. So let's just say that the market comes down and we get one low below the level. That becomes your reference point for your setup, and then you can move at that point. Bit of an overlap here as well, but and that could be 1 and 2 and 1 and 2 there as well, I guess, because of the overlap. But once again, we're working with large numbers, so 100's pretty big. So there could be one more little high here, but that's about it. No more. So, I mean, this, you know, I've got it as an A and a B and a C here, but, you know, it doesn't really have any overlapping wave structures, so it can be very easily be counted as an impulse wave. So we need to be very careful about the turn that we take here, and just small positions, and then build on that. You know. Let's have a look at Microsoft. So the same thing again here as well. What we were looking for. Let me just expand this up here. So as a switch trade setup, you can short it under here and put the stop above here. That's a switch. The move, it's the 13th today. I just can't believe that. Why they don't put the volume in there for that? I have to ask. So from the top here to here, we're not quite at that space that we wanted to be, which is a little bit higher up there. So that's interesting. But these two lows here on this 320 here is sort of played out quite strongly at this point. Stochastics giving a buy signal, but they can just trip out down the bottom as well, so you've got to be a bit mindful of that. But looking promising. But you'd want to see, you know, increased volume on this bar, or the increased volume could be selling volume too on that retracement of that top there. Well, let's go in and check on this. So, so from the low to the high here, so the 61.8% is a bit higher. So we've got wave 1 and 2 and 3 and 4 and 5 here for the A wave, and then we looked at this as the B wave, and then I've looked at this as wave 1 and 2 and 3 and 4. And then we need to look at this as, well, yeah, I mean, maybe I've got wave B there. That would leave that as 1 and 2. But it's a really big wave 2, you know. It's not sort of typical, but it has overlap wave 1 there. Just see what I've done. Anything on the 5-tick chart here, just to resolve that a bit. I haven't updated that for a while. So we've got the 1 and 2 here, and 3, 4, 5, so that's all okay. I just wanted to have a look in this little space here just to see if that's, yeah, it looks like a C wave here, so we've got to put the B wave over here, an A and a B and a C, because it just doesn't fit right there. That's one situation. So that leaves that as wave 1, an A and a B and a C for wave 2. And that would be 3, 4, 5. And that's it then. So so I just need to put 5 ticks here just to remind me that I've got some mess to clean up there. So that resolves that a bit better, doesn't it? So we put wave 3 over here, wave 4 here, wave 1 here, wave 2 here, and wave B there. And that's that. And we've got 5 waves down here. Alright, so this trend line moving through here, because we've got 5 here, it means we should get another 5 coming down. So in that instance, when we've got a trend line such, we talk about it. Just this is the trend line. So the market will come down through here. There'll be some sort of bounce. Then it will come through and then it will retest it. It's the same as a classic trading levels pattern on a horizontal line. It does the same thing. So then we can look to short it under here. The thing is sometimes you just get a double retest. So trigger in here, then come back up here and test it again and go down. So don't leave your stop above this last low here, leave it a little bit higher. But because that's 5 waves there, we shouldn't breach that point there. We should be okay at that point. And we've got that nice big number here, but still just leave it out the way a little bit. And also once group 2 here, 65.72 here becomes the resistance as well, then you can also look to short here and then under the 50 here as well, the midpoint here. So between 10 and 20, we've got the Fibonacci sequence 1, 2, 3, 5, and 8. We've got group 1 here, the midpoint, and group 2 here. And just doing this, you can see that the market bounces around them, so that's handy within itself. But really what it does do is it helps break down a problem into smaller problems of support and resistance. And that way you can manage your risk better, your exposure. Alrighty, I'm just going to leave it all at that. So yeah, all tricky business. Microsoft is probably the easiest to trade. It moves nice and smoothly. It works with all the levels nicely as support and resistance. It gives a nice clean wave count. I think it's, out of all of them, I think it's my sort of favorite one. Yeah, but I'm not trading it at the moment. Yeah, I'm short on the S&P, so we'll see how that goes. But yeah, I'm just making comment, that's all. So I'm just going to remove this because we did short it down here. This one, don't need that. And once again, we've got a pretty clear 5 waves down here, like Tesla and Apple and so on. So it's a good case for that. But yeah, I mean, you could count this cleanly up here as also as impulsive. So it would be wave 1 here and 2 here. And then this would be the 3rd wave here. So just based on that there as well, looking at both sides of the coin, we need to take from this low here, the wave C of B, and then moving this up to here. And we can see that we're already at the 38.2% retracement level there through here. So if it drops down into below group 2 here, then you know that it's, it's leaving that number. So that's good. Alrighty, yeah, I'll leave it at that. So yeah, just be careful about the turn and don't overtrade, and be flexible. Don't just get locked into being short, because some of those other earlier markets that I showed you, the Amazon and that, there's a good case for them to move higher, but we're looking for the short trades. Alrighty, cheers.